All right, so week four, outlook number two. Let's go ahead and start with 6B, or the Great British Pound Futures. You'll see a few annotations on the chart. They're based off of a call I had with my members last night, and this just a little bit more data beforehand. Like all of this data past the front forward of this purple line did not exist. So that's why this swoop or this curve exists. We were extrapolating scenarios. But anyway, what we ended up extrapolating, I'll explain now to you all, or to anyone who's watching this, is the fact that in the previous outlook, we discussed a liquidity draw and price action looking to move higher. Well, we ended up getting that price action moving higher, but subsequently, we ended up drawing liquidity from a liquidity point here, and that caused price to go lower. Well, at the time of the call I had with my members, we had just seen essentially this. This is where pretty much market closed, or was getting ready to close, and we were discussing like what was going to happen moving forward. Well, this is where we analyzed this area from this low to this high. We said that there were two possible scenarios. One, price would move lower, or price would move higher. Pretty simple, right? But breaking it down even more, it's based off of the responses at structural or liquidity points. Now, from this low to this high, everything is pretty much balanced. All the wicks are touching. There's no imbalance here. The last imbalance that had been printed was this price gap here, in which was immediately filled, and that's what led to the run on this high. And so logically, you would expect continuation of price action past this high to continue, but we ended up getting a liquidity draw, which pushed price lower. And so now, if price is moving lower, there's only two things that it can do. It's either going to go to mitigate inefficient pricing, or it's going to purge liquidity in the form of a liquidity draw. And so because there's no inefficient pricing here, there's only two places that price can go. This liquidity point, which is a low, and this liquidity point, which is also a low. Well, we want to see, aligned with the bias, price to push higher into this area of interest. So what we would like to see is not a break of structure of this low here, but rather a draw in liquidity. And that is exactly what we got. Because if price were to break structure here, the only logical conclusion, if there's no inefficient pricing existing below it, is going to be drawn towards the low or liquidity point that is this low here, which means that we would either get another liquidity draw or a break of structure and price would free fall. We don't want that. So the scenario that I was drawn towards was saying that, hey, if we're looking for a continuation of price action higher, we just had a response from deeper into discount. We just had a liquidity draw in itself that led to a break of a previous liquidity point. If this is going to continue higher, we need to see a draw in liquidity from this low here, and that's exactly what we have. It seems currently that the response is holding, the bulls are holding, the price action attempt to push price lower, it seems like it failed. We have closed with a bullish candle here on the 4-hour time frame. So I'll be monitoring price action to see if we continue higher or if we transition and go lower. If we transition and go lower, as I said, there will not be any inefficiency stopping price to move lower to take out this low. If we're looking to continue higher, well, the logical targets would be this high, this high, this high, this high, and then ultimate target would be this high before we reach our area of interest. So that's what I'm seeing on 6B1. All right, on gold, we're just basically just booming. There's not really much to say here. If you're day trading this, just keep day trading. I would say follow the bias. It's still bullish. No reason to look for sells despite the very strong, impulsive, low volume sell off here, or yes, high momentum, low volume sell off here. It looks like it ran this price gap. It ran just below it, so there's not really much that I can talk about here for gold right now, other than sticking to the macro bias, which is a bullish trend. Right. So what we had here was a pullback. This annotation was a pullback into a price gap that led to the next portion of this run. So if there is any portion of a pullback, we're first going to have to create a low and then break that low to pull back into any inefficient pricing. But that doesn't seem likely at the moment. There's basically like the last low that would need to be broken would be essentially right here because we have low, high, and now we're looking to form a low, or we're looking to begin pulling back to take out this low to solidify the price leg existing from this low to this high. Um, yeah, that's pretty much on gold. All right, NASDAQ. Whoa, it looks like we decided to mitigate 50% of the area of interest that I called out that I said was unlikely. I remember speaking on the price action here at this low. I was anticipating price to mitigate. Well, I'm sorry, not mitigate. I was anticipating that price would draw liquidity and continue higher, but it ended up gapping down and pulling back to take out this low. Now, what I remember was that I said if this low breaks, there's not really much to hold at the price action, and the price will be drawn lower. But that was before I reanalyzed with my members, and we talked about okay, like there's no inefficient pricing existing here. There is a price gap here, but it's not substantiated because there's no action and mitigation holding it up. And that's what led me to seeing this as an area of interest because this was the price gap in which it mitigated. So there was an action and mitigation that occurred. It went just a little past 100% of the price gap, and then we ran higher. And that's why we got this pullback in response from this price gap here that was here. And so because of that response, that's what led us to seeing the 50% of this area of interest here. I'm sorry, this area of interest here, and that is what price was drawn to, rejected, and gave a very, very strong response from. We'll see what happens moving forward. So this liquidity draw happened and it failed. This liquidity draw happened, it failed, ran back into the discount side, which is even better because we have a discount side response for buys. So there is opportunity that was taken here at 50% and mitigated it perfectly. And now we'll be expecting continuation of price action higher, not completely closed off to the fact that price could pull back and mitigate anything inside of here, but that's not the point of this outlook. It's to more so look at the overarching price action here on the higher time frames. All right, silver, like gold, I'm not really looking too much at it right now. Still just monitoring how the price action. We're in a very, very strong bullish run currently, so I'll need to see transition from bearish or from bullish to bearish price action in order to start analyzing this more closely. But right now, I'm just going to let these pairs or let these instruments do what they do. All right, now on to the Dow Jones. Excuse this annotation. This is a position that I'm looking at. All right, so what ended up happening here was I remember that I said I wanted to see draw on liquidity and continuation higher, or we would look for a break of structure of this low. And that's exactly what happened was we got scenario number 2 where we broke structure this low, which also solidified the price leg from this low to this high. So now that we have the price leg solidified, I no longer need these annotations. We know where our liquidity points are. We know what happened. We got our break of structure. All right, so this is the area that we're looking at. Now, I talked about it with my members yesterday that we would be looking for opportunities on the discount side, and specifically we would be looking for the origin of the move, and which this 4-hour price gap here is what was mitigated. Now, we did refine this to this green box in which we were looking for entries, but price had gave a very, very strong response from 50% of the price gap. And I don't often do this, but going down to the 5-minute time frame, there wasn't really much that I was looking at. I mean, immediately, I would say that this, retroactively, this was probably the entry that was given uh, post mitigation of the 50%. So there is a response here, but if this fails, I do have an entry set up here closer towards 100% of this price gap, of this area of interest. And that's because if this fails to continue higher to take out the liquidity point, it means that it's not enough liquidity to sustain the movement higher. So if price cannot sustain movement higher, it's going to move lower. So going back out to the 4-hour time frame, this is where both sides of the price leg are important to understand how things are mitigated. So notice how we have this wick here, and we had a very strong bearish response going towards the close of the trading day. Well, that's because on the premium side, even though there's a gap there is a price gap, and that's exactly what price mitigated. So we're going to be monitoring this pretty closely because I would like to see price pullback, just on personal bias to come get me right and get this entry. But because of the mitigation and response here, action and mitigation of this price gap in the forward time frame, this is a little concerning to the bullish price action and response from 50% of this price gap shown here. So essentially what we have is an action mitigation here and the discount side aligned with the overall bias. We have an action mitigation here, counter trend. So the bias would tell me to look for continuation of price action. So for this 4 hour price gap to fail or 4 hour area of interest to fail. But what we're going to do is, because I've refined this and I've seen essentially refined the origin of the move to this green box, what I would be anticipating is this actually sustaining, pushing price lower back into this green box, and then continuing price action higher. Now, that is a very, very skeptical, extrapolated event that's happening. If this does not happen and we do continue higher, then all I'll say is we just missed the move. Is because we have the response from 50%, and then post response, you have that entry that gave this price action here. So whatever happens from here on, I'll be watching. I still have a trade set up down here, expecting or anticipating price to pull back. But if it doesn't, it is what it is. Miss out on the trade. Happens to roll on to the next one. All right, so that's what I'm seeing on YM. All right, and I believe that is it for this outlook. Peace.